UP90 Institute YouTube channel by Mr. Veerendra. Kumar. Contact number 9839473639. B page and Instagram. Maths Helper. This notes is very helpful for BBA, BCA, B.com, M.com, and competitive exam like as UPCCL Assistant Accountant, APPGT, and APTTGT Commerce and others. Basic accounting terms. Business entity. Business entity means a specific identifiable business enterprise like Big Bazaar, Super Bazaar, your father's shop, Transport Limited, etc. An accounting system is always devised for specific business entity, may be called an accounting entity. Transaction. Transaction refers to the activities which are occurred during the accounting year. Example, purchase, sales, rent paid, salary paid, purchase of assets, etc. Buying and selling of goods in business is called transaction or transaction, that is, all the exchange related to business which can be evaluated in currency is called transaction. This transaction can be cash or credit. If the value of goods is paid at the same time, then it is called cash transaction. On the contrary, if the value of goods has been promised to be repaid in future, then it will be called credit transaction. Events. Event refers to the result which are occurred at the ends of accounting year. Example, closing stock, closing capital, profit or loss, etc. Assets. These are tangible or intangible things whose value can be expressed in terms of money and which are accepted or receivable by a business. Assets can be broadly classified into two types: fixed assets and current assets. Fixed assets. Fixed assets are assets held on a long terms basis, such as land, buildings, machinery, plant, furniture, and fixtures. These assets are used for the normal operations of the business. Current assets. Current assets are assets held on a short-term basis, such as debtors, account received, bills receivable, notes receivable, stock, inventory, temporary marketable securities, cash and bank balance. Liabilities. Liabilities of creditors, when the money is payable by a business organization for goods purchased on credit from a person or IRM, then that person or organization is called a creditor of that business organization. Such creditors are also called business creditors. Liabilities are classified as long-term liabilities and short-term liabilities. Long-term liabilities. Long-term liabilities are those that are usually payable after a period of 1 year, for example, a term loan from a financial institution or debentures, bonds issued by a company. Short-term liabilities. Short-term liabilities are those that are payable within a period of 1 year, for examples: creditors, bills payable, bank overdraft.